Hi, this is Randy Lindsay with Hawkeye Traders. I just wanted to do a quick update on the commodities markets. Previously, I'd put out an update showing some bullish build in soybeans and corn. I wanted to follow up on that with some updates on some other ones as well. Looking at soybeans, you can see that it's continuing to build. From our initial recommendation of going long, we could see definite signs of accumulation going on through the accumulation distribution channel going on here, and then the break to the bullish side giving us a confirmed entry point. So looking at this location right here, you can see the initial potential entry. Momentum was showing it was a little bit still to the weak side, but after a brief correction, we got a nice confirming entry signal where we were able to take a position on and look for a nice bold build up. Resistance is sitting about 877.5. We're looking for a potential first push up to about 898 in this range right here. So it's a short-term goal for soybeans. It looks good. Corn is continuing to build as well. Looking at the same type of a setup, got an initial entry point right here, and then you can see from the Hawkeye ads that the point of entry really should be more like right here. So the point of entry initially is here with no ad yet because we are in consolidation, but it looks like we are still continuing to build. Break above 334 3/4 would definitely take us up into at least a $344, $345 range. One other one I wanted to point out was the copper. The copper index is looking awesome. It's continuing to build. Copper is a very good indication of the strength of the economy, and the economy is really coming out of this really well. So looking at this, there was many potential points of entry. If you're looking at the Hawkeye tools, initial entry, you would have been able to build to your position, add more, and you'd be fully loaded with 7 full contracts on this copper contract as it's continuing to build. Looking at the weekly, you can see still lower than average volume, so I'm not sure if it has much room to go above the 28-29 area, but right now it looks like it's all full steam ahead, and we have an average price in with a potential stop just around 252 on that contract. One other point I want to pull out is the DBA. Looking at the DBAs, the agricultures, you can see from corn, soybeans that you've got some good influence here, but wheat's the problem child. Looking at the DBA is the overall agricultural ETF index. We are seeing some accumulation distribution signs in an area where we might be potentially looking to go long. Nothing is set up yet for us to get in and do anything long because the 2-day heat map, the momentum is still showing that it's still building. There's nothing yet to get us in. The monthly is still very much bearish, and let's look at wheat to see exactly why. Wheat is just continuing to drop and fall out of bed. You can see it broke down below support. The weekly has gotten into a new downtrend with really good building volume. So there's a lot of weakness coming up here out of the wheat index. So the DBA is on my radar. I'm watching it to see if maybe we can get a turnaround and potentially get a good long on it. For more information on how to trade the Hawkeye way, come to our free live Wednesday training rooms. Also, get your very own copy of Hawkeye. Hawkeye tools are awesome, and you can click the link below to get a copy of your own. Thank you very much.